Hi everybody, Steve Crivers here, developer of the MTPredictor software program. In today's video, I'd like to look at how the US E-minis unfolded yesterday, which was Tuesday, April the 1st actually. So let's start with the standard MTPredictor trade setups, which is where you trade in the direction of the STF color, and let's have a look at the 3-minute ES. So there were two automatic setups yesterday. We had a buy setup here that was in the direction of the STF color because blue means an uptrend, therefore that was with the STF color. We had a history triangle here which shows us there was a a sell setup here. If I place the analysis on that bar, you see it was a TS4 sell, but that was against a blue STF, so standard traders would have avoided that. So let's place the analysis on this particular trade setup. Now the question is, which bar would have actually been filled? So I want to slide to the left hand side here and show you what I mean. This is when the first TS3 setup came on. It was signaled when we had this blue buy bar here. So let's place the analysis on the chart there. In fact, I'll actually just put a little bit more space on the right hand side there so we can just see that a little bit clearer just for a couple of minutes. There we go. You can see that's where the position sizing was suggesting you place your trade. You go long 3 contracts for a 2% risk on a 20,000 sample account at 71.25, and that's where your stop trigger would be. If I move forward one bar, you can see that that long trade was never filled. It was never filled because those two bars made a double top. I go forward, and then we actually had another buy setup here. So I just want to have a look at what the risk reward would have been at the first, on this first setup. It would have been 3.1R at the first target. But because we now got another blue buy bar here at a slightly better level, because it's slightly lower, and we're within 5 bars of the turn, 1, 2, 3, 4, 5, just about at that limit, we can now say, well actually I want to do the analysis as of this bar, and you can see this gave us a slightly lower entry, now at 1871, and that increased our risk reward slightly. Next bar we then get taken into a long trade, and if I scroll forward you can see that the market went up and up and up and up and up. Just set that back to there. Up, zoom out a bit. Up and up and up, and actually came to our first target, which was here just before the close. And in fact, actually, if we look at the day, the day opened there, it declined down, and we actually got our buy signal as of the bar of the low of the day. So we were looking to go long at pretty much the low of the day, or a signal off the low of the day, and our profit target, as you can see, was pretty much the high of the day. So one trade there from pretty much the low to pretty much the high for plus 3.6R, in other words a profit of 3.6 times the initial risk, was a very, very good result for any day traders yesterday. Let's have a look at some of the other markets. If we look at the YM, YM basically went nowhere. YM had a buy signal here off this bar. This first one wasn't filled, so off this bar you can see it basically went nowhere. We actually had a TS4 sell here off a black STF, so if you had have come into that level and done a stop and reverse at the low of that bar, you'd have banked 1.2R profit, and then just got filled, just got taken out for a -1R loss. So basically nothing happened in the YM, pretty flat. As you can see, it was a pretty horrible, flat, yucky day anyway. I'm just going to take that all that space off the right hand side there so we can see what we're doing a bit more. So really a hard day on the YM, which basically chopped sideways. But again, we did have the buy set up almost at the low of the day there. Let's go to the NQ. What did the NQ do? Slightly different on the NQ. On the NQ, STF was blue all day. We had a TS4 buy setup here off this bar, which then took you into a long trade and then stopped you out for a -1R loss. This is the beauty of correct position sizing, is when losing trades come through, and they do, every single professional trader knows and accepts that any system will have losing trades. This is actually a must for any system, but the trick is keeping the losses small and controlling them. So this is why we use position sizing, which varies the number of lots, contracts or shares. So this would have been what we call -1R loss. We then had a history triangle here that shows there was another setup at this particular point here. This again would have just been taken in just taken out for another -1 hour loss. So at this particular point in time, you'd have had 2 losing trades and been 2 hour loss down. We then had another DP buy set up here. If we place the analysis on, the market this time reversed nicely, went to the first target, and if you're using the standard trade management guidelines, you'd have come out at the first target because the STF was weak, in other words less than our strength band, so you'd have banked 2.8R. So this is a good example of how correct position sizing helps, because even though you had 2 losing trades and only 1 profit, the profit was 2.8 or almost 3 times the losses or the initial risk. So in other words, your -1 plus 2.8 actually put you back into profit and a little bit at the end of the day. And this is what I was focusing on my training webinar yesterday, is that successful trading isn't necessarily about predicting the market correctly or getting it absolutely right. You can see here the YM did carry on a bit higher later in the day, so some people will say, well, you missed out on a bit of profit, but that doesn't matter. What matters is whether you make money or lose money at the end of the day. And here you can see that the correct position sizing would have wiped out the 2 losing trades and put you back in profit. This is what professional traders do, is they keep their losses small, or in other words their initial risk under control, and they look to have profits that are larger than their initial risks or losses. This is the best way to become a successful trader. So anyway, the NQ overall a pretty flat day, and the YM, as we've seen, a pretty flat day. But the best trade of the day, as we started this video, was using standard trade management guidelines, would have been this TS3 buy setup here that came in at the low, came all the way up to the top there for a lovely 3.6 hour profit. If you're a bit more of an advanced trader, and I have to show you this for consistency, is for an advanced traders we go to the 15-minute charts to place our larger degree support and resistance zones on. So for this you'd have probably gone back to this last pivot here, right mouse click, place the decision point on, and you can see that the market yesterday did, if I drag this across a bit, did go up and just about tag that decision point resistance there. If I can now come down to a 3-minute chart, you can see it a little bit easier. So in other words, that was our 15-minute resistance area. So as the market was backing down from that, you would have probably been a little bit more cautious about taking this buy setup, or if you had have taken this buy setup, you might well have actually said, once you passed the 100% initial risk level, bring your stop to break even. So you might have been stopped out for break even there, and then you said, well, actually as the trend's down, you might well have said, I want to take that TS4 sell, which would have just clipped you in and stopped out for a -1 hour loss. And that's the nature of trading sometimes, is that we've had some very, very good advanced trades very recently. We had a couple of holy grail trades which back to back made +7, +8 hour profits each. So it's only fair that that the market goes in cycles. In other words, on the advanced analysis, the cycle now, or yesterday, was a bit more of a harder day. And this is the fact of trading, is that trading is not easy. Trading is not simple. You don't make money every day. The patterns aren't clear every day. Sometimes there will be days when, quite frankly, the market doesn't do what you expect. Any professional trader will know and accept that. But the trick with MTPredictor is, if you do get days like that, and they will come through, is that because we use correct position sizing and we keep our initial risk small, is that when you have bad days, the losses are kept small, but when you have good days, the profits are much, much larger. And again, over time, that's what builds up your money, is having large profits and small losses, not necessarily getting everything right every day. So that's the summary for yesterday. YM and NQ, pretty flat, didn't really do much. The ES on the advanced analysis would have came in and had a pretty flat day as well. The only thing that would have been the saving or the best analysis for yesterday would have been if you'd been a standard MTPredictor trader and you'd have had just trading in the direction of the STF colour. There would have been that lovely long trade from pretty much the low up to take profits pretty much at the high. So as with all trading, it swings and roundabouts. Standard traders will go through the cyclical nature of trading. In other words, will go through cycles and their profits and losses. Advanced traders will just will do exactly the same. So at the end of the day, they probably balance each other out.